following up a very interesting panel. I'm John Papageorgiou, EU Affairs reporter at Athens Radio and head of the Athens Digest. Many recipients here, as I can see. And we are going to focus on the Greek debt, building on the previous discussion. And as we have very limited time, I will kindly ask all speakers to be as comprehensive as it gets. And let me thank Julia Lendvai, the Mission Chief for Greece at the European Commission, Joong Shik Kang, the Mission Chief for Greece at the IMF, Paolo Fioretti, the Mission Chief for Greece at the ESM, and last but certainly not least, the Chairman at the Council of Economic Advisors here in Greece, Mr. Michael Arghyrou. Thank you for being with us. The discussion focuses on the Greek debt, obviously on the reforms needed, and we are going to have, as I can see, 2 rounds of discussion. So let's focus at the first one on the state of play, and then we can focus a bit on the reform agenda, which is much needed, necessary to maintain the momentum of the debt sustainability. Julia, the floor is yours.
Yes, thanks, John, and thanks for the possibility to attend this fantastic conference again. So let me start with the positives, which have already been mentioned, actually. Well, many of my points have already been mentioned during the morning, but I will still go through. So Greece has obviously come a very long way since the sovereign debt crisis. And there was significant progress in addressing the economic and fiscal imbalances, thanks to all the structural and institutional changes that have been adopted, which has also been reflected in the resilience of the economy in the COVID crisis and the following crisis. And so last year, growth was at 2%, which is, as was mentioned already, well above the euro area average growth, and is forecast to remain around this value in this year and next. Also, the resilience of the Greek banking sector has significantly improved. The fundamentals of the banks have improved. The core profitability has been among the highest in the euro area last year. Asset quality has also improved, mainly thanks to the Hercules asset protection scheme. Non-performing loans went down from over 40% in 2019 to around 5% by end 23. So this progressive unwinding of imbalances has also been reflected in the falling sovereign spread, which since May 23 are below the Italian spread. And investors' confidence has also returned, which is also reflected in inflow in foreign direct investment to the country. So achieving investment grade status, not with Moody's, but with 3 other rating agencies, is of course a key milestone for Greece, and it signifies confidence in the country's economic stability and governance. And it's also a substantial boost for the Greek economy. Lower borrowing costs and increasing confidence allow for more investment, more job creation, and higher growth. So the critical question at this juncture is how sustainable these achievements are and what remains to be done. Now, in the current volatile environment, I would not dare to make very big projections of growth because it's very difficult. But as I just mentioned, what we have seen is that the Greek economy has rebounded well from the pandemic slump. The growth potential has increased a lot compared to the past decade. But that means that it's currently at 1%, whereas it used to be in the negative realm. And that also means, though, that at 1%, there is not a lot of convergence to EU average. And even at the current growth rate of 2%, it will take a lot of time to catch up. So I think that's really the thing to work on. While cost competitiveness has improved a lot, the non-cost competitiveness, that is productivity, again, it was mentioned in several sections in the morning, there is ample scope to improve this. Now, this can, of course, and again, I will not be very revolutionary, regulatory environment, public administration, justice, tax administration, all the reforms in these areas need to continue. The same holds actually for the financial sector, which, as I said, has become much more resilient. But the level and the quality of the capital can still be increased, as can the long-term profitability of the banks, which actually, as Martin just said in the previous panel, last year's high profitability was mostly due to the margins. So it would be good to also increase the loan portfolio and to go into more lending to the economy. And then I would also stress, as Declan did, the employment and activity rate to tap the full capacity of the Greek population, female employment, but also education and the quality of healthcare, which are important. Now, all this, of course, was discussed in a volatile global environment. And as Alternate Minister Papatanassis also insisted, there is a continued need to pursue prudent fiscal policies, and it's welcome that this is high on the government's agenda. So, in conclusion, while Greece has made a substantial progress, the journey is far from over, and of course the EU keeps supporting the Greek economy with RRF and other available funds.
Thank you, Julia. Joong Shik, your initial remarks, and if I may, incorporate the fiscal policy factor in your remarks.
Yes. Yeah, I think yesterday and today we already heard a lot from other distinguished speakers about very significant progress that this Greek economy has made over the last few years. For example, if I can give you a few numbers, real GDP has increased by more than 16% over the last 3 years, which is one of the highest in all around the world. And during this period, public finance have also notably improved over the last 3-4 years, with their primary surplus already reaching 1.9% of GDP. So on the back of this very strong growth, fiscal consolidation, and high inflation, public debt to GDP ratio has declined by already 45% of percentage point of GDP over the last 3 years, and we expect another 10 percentage point of GDP reduction this year. And if I understand correctly, this is one of the fastest pace in modern history. But at the same time, we all know, as we discussed this morning, that still the level of public debt still remains very high. And everybody agrees that more efforts are needed to further reduce this level. Then the next question is how we can do that. Obviously, continued strong growth will help. But at this point, I want to emphasize that right policy mix is needed at this juncture, not only to ensure this public debt sustainability, but also to achieve high growth in a sustainable manner over the medium and long term. Then very next question is, then how we can deploy this fiscal policy to achieve these dual objectives, public sector debt sustainability and growth sustainability. It is our view that continued fiscal consolidation in a growth-friendly manner will help to achieve those dual objectives. Then let me elaborate what I mean by this growth-friendly manner. It includes 2 elements. First is the pace. Second is the composition. In terms of pace, I know that government plans to further consolidate this year to achieve higher than 2% of primary surplus. From our perspective, this pace of adjustment is very appropriate because given the very strong private domestic demand that we discussed this morning, thanks to the very robust employment in the labor market and strong investment growth based on the RRF funding and etc., we are of the view that this pace of fiscal consolidation will not derail the robust growth in the near term. At the same time, we are also of the view that maintaining the primary surplus at above 2% over the medium term will help to create some fiscal space for more important investment, including public investment, as we discussed yesterday, as well as for more digital and green transition, as we extensively discussed yesterday. Second, in terms of composition of the spending, we all agree, based on this morning's discussion, that despite very strong investment growth over the last few years, the level of public investment still remains low compared to other European peers. That means there is much more need to do more, to make more investment. But we know that at least over the next few years, RRF funding from European partners will finance significant share of those public investment in Greece. However, beyond 2026, 2027, it is inevitable that Greece should secure enough funding resources to continue to finance such a large investment need in this economy. At the same time, the critical social spending, such as education or healthcare, those are also still relatively low compared to other European peers, so that those spending should be protected or, if possible, should be expanded, because those are the very critical element for inclusiveness of the growth based on other countries' experience, which is also very important for more sustainable growth going forward. So in sum, by conclusion, we are of the view that growth-friendly fiscal consolidation is very critical to achieve both fiscal sustainability as well as achieve higher growth in a sustainable manner going forward. Let me stop here.
Many thanks. Paolo, still a significant part of the Greek debt is in your hands. Yes, so the floor is yours.
Thank you very much. Yes, it's true. And I saw that you have shown the old picture of me without beard. I can reassure everybody it's me. No, I want to start from the title of the conference that says that we are here in search of opportunities. And this is the story I want to say is about an opportunity for Greece, the economy and society that comes from a virtuous cycle that started in to work in full in the last year. And this virtuous cycle, under the right conditions with the right strategy, I think will be able to create jobs, to foster growth, and at the end help reducing debt. I will try also to focus a bit and to reasoning about how the banks play a crucial role in this virtuous cycle. As you remember, in the past, the crisis, the engine of the crisis was a vicious cycle that started with an unsustainable fiscal position that triggered several downgrades to the very lowest level of investment grade scale. And this affected the value of Greek government bonds, so that there was a haircut, banks reported losses, so needed to go through several recapitalizations. In addition, then, the necessary fiscal consolidation impacted on the economy, that Greece entered in a deep recession, NPLs surged, banks reported additional losses, and they had the balance sheet completely impaired. So now the situation is changed. It's completely changed because, we have discussed about the investment grade, and I think that apart the growth, but in the last years, Greece was consistent in having a strict fiscal discipline. This fostered growth and helped support the return to investment grade. Banks cleaned the balance sheet, reduced the NPLs, as my colleagues already said, and also now returned to profitability, now mainly for the increase in interest rates. But this shows how the situation has completely changed. Now, this has created a completely different environment. And the economy is growing, is an outlier, banks are doing well. This virtuous cycle, based on fiscal discipline, investment grade, banks returned to generate profitability, can help to unlock future growth, in particular when I think the RRF, the Recovery Resilient Plan, will end in 2006, if I remember. And they will, in this way, the banks will be able to return to finance the economy and support growth. But this, for me, as works, this optimistic story or this virtuous cycle works under a few conditions. This is the strategy I meant. First, that the government has to continue to maintain fiscal discipline, and I know that they are committed to this. And the government continue with the reform to support the investment grade, because this is reaching the investment grade, as Mr. Tsakonas, Dimitris, said before, is just the first step. They have to aspire to have other levels of investment grades. And third, in particular, is for the banks to use this profitability to continue their transformation. And because they need to be transformed completely, not completely, but continue in their transformation, to be able to adapt the changing world, the new reality, and they be able to finance the economy. In this way is, for me, the way to reduce debt.
I will ask you on this in the Q&A session. Michael, we may have your initial remarks. You are the internal perspective. So, the state of play.
Indeed. Thank you, Yannis. In a nutshell, I would say that so far we have done quite well, and that was by no means a foregone conclusion 5 years ago. Nevertheless, the country is in the middle of a journey, and the journey is not yet completed. Let me elaborate a little bit on the first part. Over the past 5 years, and especially after 2020, I think that Greece has indeed significant progress in terms of turning around the medium-term dynamics of the country. Let me recap on the main stylized facts, which have already been heard. Nevertheless, it makes no harm of repeating some of them. Clearly, the country has a high growth rate, both in terms of comparison with its own performance in the previous decade, but also in terms of the performance with peers over the last 3 years. The unemployment rate is declining, which is important both for economic as well as for social reasons. We have had, following the shock of the pandemic, a fast return to healthy primary surpluses, which of course are very important in terms of sending the right signals for the future. The volume of investment has been on the up. Here I would like to mention that based on the data from the Eurostat, Greece has the highest growth in terms of investment volumes over the last 5 years, starting from a low base. Nevertheless, investment volumes are up by 40% compared to 2019, including foreign direct investment, which has increased a lot. Banks have improved further their performance in terms of profitability, in terms of reducing imbalances such as NPLs and deferred tax credits. Importantly, the country has become much more extrovert. We export nearly 50% of our GDP now. 1 in 2 euros that we earn comes from sales abroad. That was 20% at the beginning of the Greek debt crisis, so a much more extrovert economy. Here I would like to say that the exporting story is even more interesting for 2 reasons. The first is the fact that we have a pretty diversified exporting basis. The majority of people who follow Greece have in mind that Greece exports tourism and shipping, which of course we do, and they are great industries and we will continue supporting them. But few people know that since 2020, for the last 4 years, we export more goods than services. So that's one thing. And the second thing is that these goods which we export also include an increasing volume of goods that are classified as high-tech exports. Now we export approximately 2 billion euros of goods which are classified as high-tech. Again, starting from a low basis, nevertheless, the trajectory is very good. So obviously we have a lot to do on non-price competitiveness, but we already do something there which is good. So overall, the credibility of the country has improved. This is reflected in the lower cost of borrowing, of public borrowing. Growth, surpluses, lower interest rates, plus some tailwinds from inflation, I have to admit, have resulted into a major reduction in the Greek debt to GDP ratio. And that is also a very positive development. So overall, I would say that compared to 5 years ago, Greece has a growth trajectory which is satisfactory and more sustainable compared to the pre-crisis growth story of Greece. It is a much more extrovert economy. It is a more resilient economy in terms of the sources that it gets its income, because we get more income from reindustrialization of the country. Probably it is not very well known that Greece is one of the few EU countries where the share of industry increases, both in terms of GDP as well as in terms of contribution to employment. All these are, of course, a very promising platform for the future. Now, about the future, I will make just a short comment here, and perhaps I can elaborate it a little bit further during our discussion. It is obviously important to maintain the fiscal and macro stability that we have achieved. But for me, John, now the next stage for Greece to continue growing and to achieve the real convergence to which Julia mentioned and referred to, the key is to improve the micro side of the Greek economy. This is the important thing for us to achieve real convergence. So the key word will be reforms. And this is why I tell you that the country is in the middle of a journey. There is a lot that has been done, but there is a lot to be done further.
Thank you, Michael. Thank you for keeping your time. So we will have one round of questions, approximately 2 minutes for each one. You all referred to the current state of play of the Greek debt, its sustainability, some positive developments, many positive developments over the past years. However, maintaining this positive momentum requires a reform agenda. So I will ask you to prioritize the reforms that you think are more necessary and front-loaded. Julia.
Yeah, thanks. Well, as I already started mentioning, and I fully agree with also what Michael said, so basically increase the efficiency at the microeconomic level. And this is not a small challenge, actually, because this requires a lot of small reforms, a collection of small reforms that then reach a macro impact. We can talk about the investment licensing inspections framework reform that was initiated under the program, still ongoing, needs to be finalized, creating a stable regulatory framework and environment, further opening up regulated professions. Again, a lot has been done. Greece is still still below the OECD average, so still scope to improve. Then the institutional framework, increasing the efficiency and effectiveness of public administration. Now again, simplification efforts are ongoing, digitalization is ongoing, it needs to continue. And in the same vein, tax administration efficiency can be improved. Now, among the most frequently quoted obstacles to investment, we usually find the slowness and low efficiency of the judicial sector. So efforts in this area have to continue. Public procurement, which is regularly ending up in litigation, which is then slowed down again by the judicial sector. The speed of property transactions needs to increase, and I have big hopes that the cadastre will be finalized sometime in the coming year, and also that the Hellenic cadastre will be fully up and running by then. It's also important to strengthen competition and let the price signals work to their full extent, and to limit government interventions to really market failures, to let the markets work. And as I mentioned before, on the employment side, there is a lot that can be done to improve the employability of the active age population, to improve the skills of the active age population. So again, quality of education, Greece does not fare very well, or rather poorly, to be honest, in the PISA studies, so there is ample scope to improve that, and then also to improve the skill of the education to gear it to the labor market needs, really. And I also mentioned healthcare, which remains, I think, a bit of an area of construction, and there is also scope to improve that. Maybe just a final word.
Of course.
Adopting reforms and legislation is one thing, but I think what is really important and where Greece could improve its efforts is implementing and enforcing these legislations.
Thank you very much. The word implementation was a very popular word at the IMF back in the past decade. Joong Shik, the question is the same. Please focus a bit on the labor supply, which I know the IMF focuses on, and tax evasion, if I may say.
Yes. So, yeah, I think there seems to be a consensus in this room over the last few days that remarkable progress has been made over the last few years thanks to the combination of the right policies and the resumption of structural reform after the decade of stagnation. And according to our estimate, finally, the potential growth rate of this economy turned positive in 2022 for the first time after the sovereign debt crisis. And this is on the rise. However, we also agree that it is too early to be complacent. We also agree. Why? Because there is a lot more to be gained. Even though the economic growth very strongly over the last few years, the per capita income in PPP terms in Greece still remain below the half of that in the United States, and around 1/3 below the average of the Euro area. And even though we are all talking about very strong and very favorable near-term growth outlook over the next 2 to 3 years, we all know that there are several economic headwinds that this economy is facing. For example, we all know about negative demographic outlook. We all know about increased risk from climate change. At the same time, still, despite strong growth over the last few years, household savings still remain very low, and still level of public investment is still low compared to its peers. All of these factors are weighing on medium-term growth outlook. What it tells us is that this strong near-term growth momentum is the golden opportunity for this economy to accelerate much needed and ambitious structural reforms to lift this productivity growth and medium-term growth prospect. Julia already mentioned about good list of reforms that this economy needs, but let me pick 2 or 3 things very briefly. First, we need to increase labor supply. Second, we need to promote more competition in this economy. Third, we definitely need to strengthen the judiciary system reform. Let me elaborate all of these things very briefly, given the time constraint. First, we all know that working age population is now shrinking, and there are various estimates, but there is consensus that this declining labor supply will drag on growth by 0.5 to 1% per year going forward. Not a good news. However, there is also good news. There is still pool of untapped labor force in this economy. You all know about youth unemployment rate. We all know about elderly. We all know about female. Lessons from other countries in the world, not just in Europe, but in other parts of this continent, their experience show that we can design right policies to incentivize those untapped resources and bring them to the labor market. For example, in the case of female labor, if they need more child care facility for them to work during the daytime, we can build those facilities. We can provide affordable child care facilities. If we need to change our taxation regime to incentivize them to work more, we can do that. So we need to prepare, we have to design some policies to bring labor force, the untapped labor force, into the labor market. Time constraint.
Actually, we have no time. If you want to add 1 sentence.
Just 1 sentence is, we all agree that we need more productive growth. Research shows that resource reallocation across firms is very critical to increase productivity of firms and also increase the total factor productivity of the economy. To do that, we need to improve firm dynamism. What I mean by that is we should facilitate regulation or further rationalize regulations to make it easy for the firms to enter the market and exit the market so that all those limited and valuable resources can be shifted or redistributed towards more productive firms. that will be very critical, and it is important to promote those competition to increase productivity.
Thank you very much. As the president of the Eurogroup is here, and in a few minutes he will take the floor, Paolo, just in a sentence, reforms needed in the banking sector.
Sorry?
Reforms needed in the banking sector.
I think we have, Greece has to reform the environment, the legal environment around the banking sector, where the banking sector operates. Mainly the judicial reform, justice reform, speed up the decision making, and the insolvency law to complete. I know that they are very close to complete it, to make it effective, that it's that work. Then are the banks that have also to continue their transformation, because the banks need to adapt to this changing world that is changing very, very fast in terms of risks, in terms of technology, and in terms of customer relationship. Because also with the social media, don't think that the relationship as we think it was with the banks and the depositors and the customer is as it is.
Thank you so much. Michael, apologies for taking your time. In bullets, 3 bullets. Prioritize 3 reforms, not that Greece should do, but Greece will do in the coming year.
Well,
years.
There are a lot of reforms that will be done. Some have already been mentioned: justice, business regulation, as well as legal certainty for property rights and land users. But I would like to emphasize one thing. Of course, here the economics professor comes into play, but it is really an important point. If I were to name one area which will determine the future of this country for decades to come, that is education. I think that the future of the country, because there is a future of the country beyond this generation, is next generations, and the best thing we can do for the next generation is to give them good education, which will allow them to be productive and therefore earn good salaries for themselves. But also education promotes rationality and makes the political discourse much more consensual, and this is something which will definitely benefit the country in years to come.
Thank you so much, all of you, for your contribution. Thank you. John, you have the floor, and I think we will have to run a bit.